Joel, I'm going to start with you. Do you think that these traders actually don't understand what their tax requirements are?
Oh, as someone who began trading when I was in law school, I can say even the most informed, even intelligent investors, when they begin trading, oftentimes they don't understand these tax implications. And I am concerned that a lot of them are going to be very surprised, number one, by the higher tax bill, because this will be taxed as ordinary taxation. But a lot of them might not be reporting properly. And if you don't fully report what the sales prices were, you might end up with a bill from the IRS far in excess of your actual income, and it'll take a number of hours to work through that process. So I recommend finding a good accountant for this coming tax season if you've been actively trading.
Well, let me ask you, Jared, maybe a different question. Do you think that Robinhood and some of the other brokers should be effectively providing tax advice to some of the younger traders out there?
You know, I don't want to say that anyone should be required to do that. I do think that it's a huge benefit. There are a lot of questions that a lot of people are going to lack answers for this year on tax at the federal and state level. These new retail investors who, ran this bubble and do not know the tax implications, people who are working remotely in another state who have tax requirements there that know nothing about this. 2021 is going to be the year of tax surprises. The bottom line is that if you've had any circumstances changes, you might want to talk to a tax preparer sooner rather than later. But entities that are working with these individuals, like a trading platform like Robinhood, providing that information sooner rather than later could save a lot of people a lot of time and a lot of money.
Joel, what do you think the chances are that later this year there will be a tax reform proposal that actually gets passed, and to make this more complicated is retroactive?
Passing any substantial tax reform in the current Senate will be an uphill battle. I know we saw so much progress a few years ago with the tax reform, the first in a generation that lowered taxes on income earners, on those who are taking risks in our economy, on investors. I think that there's a recognition that actually was a boost to economic growth. I am concerned that there's going to be a push to increase the short-term capital gains tax rates to discourage the type of trading that we saw over the past few months. We have to recognize and realize that what we saw with GameStop, that is a tiny fraction of the overall U.S. market cap. That's less than right now. That's less than 1/10,000th of the entire market cap. So to make big tax changes based on what happened in one stock or a handful of stocks would be a mistake.
Joel, but take the stock part out of it, or this particular episode out of it. Do you think that we should have a tax policy that appears to benefit those that are in the effectively day trading business rather than the investing business? Wouldn't you want to come up with a tax policy that makes sure that people are incentivized to make long-term investments, not short-term investments?
Well, unfortunately, some of the recommendations, such as a financial transaction tax or tax on high-frequency trading, people fail to recognize that actually hurts regular investors as well. It diminishes liquidity. It means that you're going to have to pay slightly higher to get into a position. It means you're going to have to actually earn slightly less when you get out of position, and that adds up over time. We've crunched the numbers at the Heritage Foundation, and it shows that this adds tens of thousands of dollars of years in cost, even to a typical middle-class IRA, once you compound that interest. So recognize that there are consequences to all of these taxes that you think would only impact those at the top or those that are day trading for a business.
Jared, I assume you're on the other side of this one.
No, I agree with him on this. You want to be very careful about something like a financial transaction tax or anything that would go after these smaller transactions. I mean, a mandatory mark-to-market regime, as New York has proposed for high earners. There's been some suggestion you could do that for everyone. All of these things, I know that you can look at something like the GameStop situation and say this would prevent it, but it really wouldn't. What it would do is it would hit all retail investors, and it would change the overall investment landscape. A financial transaction tax is going to make it very difficult to invest in certain equities. And also it's going to affect not only the liquidity, but the market information we have. If you want to avoid these runaway stock trades, if you want to avoid a bubble that usually are driven for some other reason, you want information, you want liquidity, and these could interfere with that.
Shepard Smith here. Thanks for watching CNBC on YouTube.